Today is Thursday, June 12th, 2025, and it was a good day for me earlier. And then in the overnight market, stocks just took a nosedive because of Israel-Iran. Supposedly, Iran was supposed to have a meeting with Trump tomorrow, but obviously, I shouldn't say obviously, I don't know what's going to happen, but it seems like it's going to be canceled now because Israel, there's basically a war now. Well, there already has been a war, but, it's complicated. Anyways, we're not here to talk politics. We're here to talk finance. So my account earlier today, it was slightly break even, slightly down, but just like kind of hovering around flat. But for the week, I was up almost 5%. But then, of course, this happened, and now I'm basically break even. Well, it looks like I was up over 21% for the month, but now, of course, I'm only up about 14%. Past 3 months, 56%. Year to date, I want to say I was above 40 something percent. 41% year to date, but now I'm only up 36.5. Year over year is still 130. Then, of course, that's what my all-time chart looks like. And if we go over to the NASDAQ, it's basically up almost 2% for the year. And if we take a look at some of my transactions, I believe we last left off at Win. So I did get my very tiny Win dividend. And then I bought a little bit more TLT, which seems to be doing good today. And then I got my TLT dividend, of course. And then I actually sold covered calls on Robinhood for the first time. And I want to say that was June 6th was the day everybody thought Robinhood was going to be in the S&P 500. And I just wanted to basically hedge, right? I was looking at the covered calls, and I know in most of my old videos, I said I would never sell Robinhood. I would never sell covered calls on Robinhood because I don't want to limit my upside and I don't want to give up my ownership. But on that day, before market closed and before any announcements happened, I was looking at the covered call premiums, and they were just way too fat to not sell. So I did give into the temptation, but my trade actually paid off. So I did sell 5 contracts, just over $100 a piece. And basically my thought process was, if somehow Robinhood did hit $100 a share by 7/3/2025, then I'll just go ahead, take that 50 grand payout, take all those option premiums, basically pay down my margin and just hold that in cash for whatever downturn I think is going to happen next year, right? So that was basically my thought process. So if Robinhood did get in the S&P and it just started shooting up to $100 a share, then I would cash out 50 grand plus my option premiums. But if it didn't, then I get to pocket some pretty decent option premiums. So that was basically my thought process. And of course, what do you know? Over the weekend, Robinhood did not get in the S&P. So I ended up cashing out those covered calls for just over $155. And basically, I made a little over $370. That realized profit, of course, doesn't include all of the fees that I had to pay, both the fees that Robinhood lists and the fees that are unlisted, of course, the hidden fees. But then I went ahead and bought some more VFC. And then I did something that I now wish I didn't do today. So today I did go ahead and close that QQQ bearish spread that I had, where I sold, I think, $100 worth. And then I cashed out at basically a $50 loss. And what do you know, just after the market closed, QQQ goes all the way down to 524. So this would be green tomorrow morning, even though I was deep in red. But it is what it is. I just wanted to show you guys how awful timing this was for me. And even though it's a small loss, it's still a loss. And you guys already know I'm going to be fully transparent. And of course, the only thing that I have pending right now are a bunch of dividends. I got Google coming. I have VFC coming. I have EA dividend coming. I got a nice Pepsi dividend coming. I got a nice Nike dividend coming. And then a very small Royal Caribbean dividend. And just my overall thoughts on where I think the market is going to go. Well, just to clarify first, before I give my opinion, I'm not your financial advisor. This isn't financial advice. Don't take any trades based on my opinion, please. But honestly, I don't know what I was thinking earlier today, because I only had one NASDAQ bear spread, right? It's a call credit spread. I collected $100 in premium, and tomorrow morning it actually would be in the profit. So I don't know what I was thinking when I was trying to close it. I mean, maybe it was just to, close at a loss, because earlier today the NASDAQ was at like 533. So it did look like it was going to be a loser, and the NASDAQ did look like it was going to make new all-time highs. But of course, it didn't end up doing it. And the reason why I opened that spread in the first place was because I thought the NASDAQ, maybe it'll show up on the Robinhood Advanced charts. So yeah, it looks like it does show up on the Robinhood Advanced charts. If you take a look at that very big gap over at the 500, that's basically what I was trying to hedge. And I only opened one because I wanted to ease my way into it. So I don't know what I was thinking when I closed it today, because I was planning on easing into hedging against the NASDAQ, but it is what it is. You can't win all of them. I did get a decent win on Robinhood, so I should be grateful for that at least. But yeah, I do think the NASDAQ has a potential to go all the way down to 500 again sometime this year or next year. Like I said, I can't predict the markets. I can only hedge against it or buy the dip. That's all I can really do. I can't really predict the future, but I do think maybe next 1 or 2 years is going to be looking pretty rough, even though you could argue that it's already been looking just from the correction earlier this year. But I do think a lot of people are going to chase buying the NASDAQ and buying the market in general, and a bunch of stocks that look like they're going to gear up. So who knows, this could all just be a short-term fake out before a real drop later on this year, or this could just be the real drop right now. What can you do? All we can do is hedge against it and buy the dips. I also noticed that there's another gap all the way down here by around 450. So if the NASDAQ does end up going down, my first target is going to be 500, and then my next target is going to be 450. Like I said, that could be this year, that could be next year, it could be whenever. It could be 2027. But speaking of this whole Middle East situation going on and how it's going to affect my portfolio, it does look like people are finally going into treasuries, or coming back to treasuries as a flight to safety. I mean, for the longest, for many, many years now, it has just been on a consistent downward trend. But it does look like in the short term, people are coming back to TLT as a short-term safe haven against basically uncertainty in the world. And another sector that investors seem to be coming back to because of all this uncertainty is, of course, oil. With the situation in the Middle East, crude oil futures are up 14% today. I mean, earlier today, not much was going on. It was slightly down, break even, slightly green. And then, of course, around 5 to 6 p.m., it was flat until it just started exploding higher as news started to roll out, of course, from the Middle East. And that is going to look very good for REPX. Man, I wish I would have bought more today. I don't know. Like I said, I don't know what I was thinking today. I closed that call credit spread on the NASDAQ that would have been in the profit tomorrow morning. I only have 400 shares of REPX. And if we take a look at the equity, it's only like 11 grand. So if REPX is up 10% tomorrow, that's only $1,000, 1,100. So it's not big money yet. But of course, I did have my price target at $50 a share for REPX. So if it doubles, it's around 20. It's going to be around 20 grand, which again, it's small money. It's still a doubler from here. And then, of course, after 50, my next price target for REPX is $100 a share, but that's a little bit more long term. But another thing that kind of surprised me today was the weakness in Palantir. And you would think with all of the defense contractors, with all of the global uncertainty, Palantir would actually start to go up because I think they still do have their gold stash, right? And gold right now is going up a lot too because of all the uncertainty. And of course, Heightened global tensions is a good thing for Palantir because that means more contracts, more products that they can make and sell to government agencies, other governments, corporations, of course. But Palantir is actually going down on this news, which is pretty interesting. And it does seem like the steam is starting to settle, like the steam is starting to let off on Palantir. And like I said, my price target for Palantir is actually like $100. So that's a pretty steep drop from here, which is why I have my 2 covered calls on Palantir. And I should probably hedge it even more. But it's still a decent company, and I don't want to bet against decent companies.